The following is a presentation of TFNN. Trade what you see with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, we've got the stocks under a little pressure so far this morning. We'll see how it ends up and how we open and things. But we do have some targets to look at. We've got the 61% retracement on the S&P 500 coming in at 1900. And then we also have the NASDAQ coming in at around 4180, about 30 or 40 handles from where we are now. And since we're down already 70 handles from our high last night, it wouldn't be hard for it to make that. So we want to keep a close eye, on those numbers to see what's going on. The key here, folks, is the New York Stock Exchange Index, which I've already posted into the room. You'll see that it's already at the 61% retracement of the move down, and with the gap down today, you're going to be looking at a possible going to the 786 to see if it was going to hold the line. We have a discussion going on in the Tiger Den about what would Paul Volcker do now, if he were chairman of the Fed. Well, I would tell you this: I don't believe that Paul Volcker would have done quantitative easing. Those of you that follow Ben Bernanke's career, he wrote his doctor thesis on how the 1929 crash could have been averted, and it was by using quantitative easing, which was a giant experiment. And I'm of the voting category that when this comes out in the history books, it's going to be saying, whoa, this is something that really wasn't very good. What they've done is they've extended the normal business cycle that's usually 4.5 years. They've stretched it out 4.5 years, so we've never really had one. So that's where I think the problem's going to lie. You just can't fool Mother Nature all the time. That's it'll come back and spank you. So this is what I think will happen. Feds increased their balance sheet well over 400% in the last 5 years, and I don't know where this money's going to come from, but it'll usually end badly. Something that is like that right now. They asked Volcker on a couple of programs with Charlie Rose a few months ago if he would do anything differently, and I can't even remember what his comment was. But when Volcker came in, you remember, folks, we had inflation at 12%. Housewives were pitting. Meat prices were going crazy. Oil prices were all up to 45 cents a gallon or something. It was we were just in a real bad straits. Bonds were trading at 50 cents on the dollar because interest rates were 14%. So Volcker came in and changed all that. And we've been in a 32-year, well, he started in 82, so it's a 33-year, bull market in reduced interest rates, and that's and we haven't had an increase in 6 years, I believe, 6 or 7 years. So that's probably going to change also. But how these folks handle it, I don't know. But watch what the market is trying to tell you. You watch the bond market, and the note market. Those are huge markets. They're far bigger than any of the other commodities by far. They're not as big as the foreign exchange markets, of course, but with the commodity markets, the bonds and notes are by far the biggest. And we've had a pretty big break in those to the downside. We've rallied a little bit off of the bottom here recently, but that's nothing more than just a normal technical bounce that should get up to about the 61% retracement of the last swing in bonds, and that would take us up to that roughly the 157.15 level. We're pretty close to 157 right now, so we're not very far away. If we get more of a sell-off in stocks this morning, then you'll probably see that level and maybe even higher. That's basically what we're see what's going on, and we'll go from that level to see if that does in fact and does in fact hold up. The rest of the indices are also looking poor. The worst indice of all, of course, is the banking index. We looked at that yesterday. We should look at it again today because it is such a terrible looking chart that it just really couldn't even, just barely made a 382 retracement of the last big swing that we had. And that's the worst. Remember, this was one of the indices that took us up into new high ground. And remember, new high ground was just back in July. So it's just been a couple of months down. We had the big break where we had the breakaway gaps to the downside. Then we filled the gap from the 24th of August. And then the last couple of days, you've been very strongly down. You're below the 786 of the move from August 24th, which is also negative. And with a weaker market this morning, you're most probably going to be looking at the same type of scenario that we're going to be, bouncing off of that low, in fact, if it does, but it does want to close below there is what it looks like. It doesn't appear that's going to have much of a bounce, but we don't know. It's still early. Every time these stocks have had a big move to the downside, they've come in and there's buyers, and the market, sees it have a pretty good rally. Whether this is going to be the case or not, we'll have to be able to see what see going on with these things. But folks, this is not a problem with the stock market. The problem is in the debt market. That's where the real problem is. This is where the bubble is. It's debt. It's not anything. Stocks will be affected, of course, but debt is where it comes from. If we just take a look at the balance, the Federal Reserve assets, what's happened to them, over the last 4 years, you're going to see a chart that is absolutely, crazy. And Nixon took us off the gold standard in 1972. That was a monumental event when we broke up the Bretton Woods Agreement, and we free floated the dollar at that time, and that's when the dollar took put a flying Walinda, and gold was freely traded. Been trading at about 100, and I believe it came on the board at the Merck and the COMEX at about 120, and then it went all the way up. That was in 73, and then in 1980, 7 years later, we buy at 865. That wasn't exceeded for let's see, 13 years. So it was a big move over 13 years. What are you talking about? 30 years. So it's I still think if it ever got moving, given these numbers like this, we would be looking at gold at $4,000 or $5,000 an ounce if we were going back to just normal macroeconomics where things of real asset value actually held together. So that's what I'm looking. That's my 2 cents worth. So see how this all comes out. We do have somewhat of a currency war on right now with China and Switzerland and some of the others, and also with the euro and the pound. Everybody's trying to gain a foothold into this, but there's not really very much. Once these market forces start, then it's more difficult for that's the main thing to look at. We're seeing some negative things from companies too in the news. We had Intel is laying off 30,000 people, and Caterpillar's laying off 5,000. We've had Volkswagen's had with their accounting. Mitsubishi, I forgot. One of the big Japanese companies also had problems with accounting. These are not good things for a bull market, folks. And then you have China shutting down half of their market. This is not good. I mean, we've got an outlier event coming in here. I don't know what it's going to be, but it's going to be something that makes us quite a bit. My guess is it will be in the derivatives area, would be my guess, because I believe that this whole thing is going to rest on 3 things: debt, derivatives, and deflation. And we've seen deflation. It's still there. We're getting a bounce, and silver and some of these things, but frankly, that's all it is. When you see copper go up 12% and drop 13%, that's telling you that that's something's not right. in Denmark or wherever they're doing this stuff. So we'll see what happens. Someone asked a question about what is the limit move in cattle today. I don't really know. I believe it's a penny and a half, but it could be 2 cents. Excuse me, it's 3 cents because it was 3 cents yesterday. I think it would be 3 cents today would be my guess. That's what I would be thinking it would be. And it's already down 3 cents, so it's had a pretty big drop, into that much too. So it's down another $1,200, which told you that it was not a very good trade for sure. We'll just keep an eye on that to see what's going on, with the cattle market. But the stop on that was 134, so that was the place to put it in. So we'll see what's going to be the case. The gold is still having a good rally here, and this is good. Silver's lagging behind quite a bit, but it's still moving in its direction. We have some little bit of fear in the market, but really not very much, given the fact where we are with some of these other things that we're looking at. It's quite an amazing thing when you watch this, that it's not much going on here with these things as far as looking at them, that it makes a big difference, to see what's going on with these things. So the limit in cattle has to be more than 3 cents, because we're already down more than 3 cents. So I don't know what it must be. 4 cents. That would be my guess. The next guess after that would be the thing that I would be watching for on that particular thing, to see if that's going to be the case with the cattle. But it's down quite a bit. Hogs are down. We've got everything down across the board. We've got wheat, corn, beans, down. Silver is, up around 1487 at a high of 1489. Nothing really dramatic there. It's only up 8 cents. Gold's up $12. We have taken out that other high at 1144, which is good. That sets up the 1160. But silver is lagging so badly that it's really a tough one to tough one to pin anything on. So I wouldn't be a buyer of silver in here, because there's just no reason. Silver only up 8 cents, which is very little. That's $400, and it is $400. Yeah, and the gold is up $1,300. So there's a big difference between the two. The spread is widening in that, so you want to watch that. We've got the Dow's. Looks like the Dow's going to open down like 150 or 160 early this morning. We still got some data coming in. We'll see if that's going to mean anything, and we'll go from that level. So we'll take a little break. We'll come back, and we will have any questions. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened, and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we've got a special guest on the line. Mr. O'Brien, are you there?
Larry Pesavento, what's going on?
Looking good, Billy Ray. Feeling good, Lewis.
I love you, man. I thank you so much for doing 2 hours. You're a trooper, no doubt. And you know what's interesting, Larry, is that and we've been through this dozens of times. But here's what the question is, right? It seems that when the market gets volatile, that these fib numbers hit like crazy, man.
Oh, they work all the time, but they work best in volatile markets because it's showing all the fear and greed that comes out in them. It's just the natural numbers. But I agree with you, and I've been doing this for 5 decades, and I'm still at awe that somehow they hit at some of these spots. I mean, sometimes they don't, but they hit a lot more than they fail, and that's why they're so interesting.
They do. There's no doubt. And it seems that when the markets get volatile, it's not that people have control of markets, but it almost seems that when they are out of control, it's game on beyond belief. Now, the DAX this morning, this is going to get interesting, folks, because, actually, the Nikkei, if you take a look at the Nikkei, that Nikkei last night closed right at its lows, and it was closed for 2 days. No, the Nikkei blew out its lows. Yeah, we're at 17,571. Yeah, it blew out its lows.
Yeah, it already did, and it's the DAX has already done it too. We haven't done it in our market as of yet, but we're not too far away. But the DAX had a 300-point swing. I mean, that's equivalent to 150 S&P points. That's a big amount. Yeah.
Yeah, that's sick. And now they got, let me just see, I think, BMW, they got Volkswagen first. Now BMW is getting crushed over there.
Mm-hmm. Yeah.
And BMW just blew out its lows, too. Pretty amazing.
Yeah, there's some things out there, Tom. It's an outlier event. Something's going to pop up that, that's not going to be good. I don't know what it'll be, but there's got to be something underlying, because if you look at the overall breadth of these markets, and I posted that into Tiger TV to let the folks take a look at it. I mean, it's just getting worse and worse. I mean, you would think after, it's just amazing.
Yeah, and what's so cool is that when you actually posted John Murphy's chart in a few weeks ago,
yes,
and that was a heads up. Do you know what I mean? Because it was like, okay, this thing is bad in a the sense that it's funny how you can keep markets up for long periods of time because of the weighting structure of 5 or 6 stocks. But that little baby went. So
well, the thing that people have to realize, Tom, if this is correct, this is a 3-year bear market, at minimum 3, maybe 5, because we haven't had a 3-year bear market since I think when Moses was in school. I don't remember the last one, but it was it was from '99 to 03 when we bottomed in 02.
Yep.
But that was a 3-year. We haven't had a 5-year bear market in a very, very long time. So I'm not sure what's going to happen with that. But
now, where are you getting that from? Is that the rule of alternation, or where did that come from?
Yeah, it's just a rule of alternation. Okay. We look at usually 3- and 5-year moves, and we haven't had a 5-year down move in a long time. I believe you have to go all the way back to in 82 we bottomed in August, and that market had topped in 74, so that was down for 8 years.
Yeah.
The Dow dropped in half, but that was Dow was only trading at 1,020, so it was not a big deal. But now we're trading at 16,000. That is a big deal, because they've set this up to hurt a lot of people, Tom. And the problem is in the derivatives, these ETFs and things. They're not going to be able to price these things the way they think they're going to, because they forgot to do what long-term capital do, and is to figure in the inequality of the market, if the inefficiency that can happen. And that's where I think the real problem is going to come in. And the Fed's not going to be able to bail everybody out. It's just hopefully who's going to be, first come, first served, is my opinion. Maybe I'm wrong, but that's what I see.
Yeah, no, there's no doubt. The ETF, particularly what's going to get really wild, the high-yield bond ETF structures, I suspect, will be the first to blow up. And it has to do, folks, with the aspect that if I'm buying high-yield bonds off Larry, and it would take me 2 to 2.5 weeks, the trade would get done immediately, but guess what? You don't even get the paperwork to 2 to 2.5 weeks. That's a huge problem, because then you're going to have the aspect of like the first time that you traded in the pit, that the guy on the other side says, no, I didn't buy that off you.
Yeah, big out trade. You don't need that. That's for sure.
Exactly. Do you know what I mean? And it's intriguing, because for sure the public doesn't understand it, because it's hard for us to understand it.
It's really hard for me to understand. I'm in the business all the time like you. I mean, I don't understand it.
Well, listen, man, thank you so much. We appreciate you doing all this work for us out there, and for all the folks and the Tigers and Tigresses, Larry.
And thanks for calling in, Tom. Thanks a lot, buddy.
Have a great one, man. Have a safe one. Bye-bye.
877-927-6648.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're going to take a look here at the Canadian dollar. We've been watching this for quite some time, and what we're going to do here is post up the weekly chart, and you can see that we've got a big ABCD pattern measuring up here to this 134 and change level. So far, the high has been 134.15, but it's still a little bit early in the day, and we don't know. I think the best way to handle this is wait for the top to come in and then see the market come down and make a little Gartley on the way back. That's the safer trade. It's the professional trade. That's what you want to do. You want to say hi to everybody? Huh? Say hi.
Hi, everybody.
Good boy. Now, that's from a 4-year-old that really knows the markets. Thank you, Avery. You did a good job. Okay, bye-bye. Have a good time at the park. Okay. That was my assistant trader. Anyway, the Canadian dollar, wait till the top is in. You know, I think this is it. This is the big ABCD on the weekly, double 1.618 numbers up in here. but it's still a little bit, and it did it very quietly. I mean, it didn't run up there with any great deal of thrust. It's drug its way all the way through the rest. So we'll see what happens, with this, and we'll see what that was. My little grandson. He's 4 years old, and he's already better than I am with computers. I was having a little trouble last night, and he told me, he said, "I think you should reboot." 4 years old, and he was right. Oh well. That's what his name is. We'll see what anyway. His name is Avery Christopher. He's 4 years old on May the 19th. And he has a little brother named Mitchell, and he's 2 years old. And he's not quite as smart, but he's getting there. Okay, let's move on to the next one. We've got a little bit of a bounce now in stocks from the low. I mean, we're still way down in the day, and we'll see where these things are going to end up. But usually when the market opens sharply lower like this, we get buying coming in, and then we have to wait and see, how it takes itself out when it finally ends up. Sometimes it just goes straight up and straight down, like it's done, many times in the past. But we'll have to wait and see. The internals in the market are relatively weak. New York Stock Exchange Index hasn't opened yet, but is going to gap down. But whether it's going to continue to go down a lot from that level, remains to be seen. So what we want to do is watch. I think we've broken some pretty good support in the New York Stock Exchange Index. And we are in a very negative time zone now that we mentioned, ever since the 14th of September, when we had the new moon and solar eclipse. And now we're coming into the 27th, which is Sunday. We have the solar eclipse. Let's try it again, Larry. We have the lunar eclipse and the full moon, and that will be a super full moon, which means that the Earth will be at perigee, as close as it gets to the moon, which gives it a very strong gravitational pull. And many times during these super moons, you do get some earthquake activity. You get earthquake activity all the time because the Earth is always shaking, but sometimes they're pretty bad ones. So we'll wait and see, what's going to happen. So we got the gold right up in near major resistance up here in this 1146, 1147 level. Silver is still lagging badly, but it could change in a moment because silver has a tendency to run, once it starts to do that. So just watch to see what happens in the first hour or so of trading. While the guns are, matching up, you'll be able to see these things put together, and you'll know where you are with some of these things, and then you'll have a better idea of what's going on with some of the things that we're watching as we go through this particular deal with these markets. Okay. Someone asked a question about the cattle trade. That just didn't work. These patterns, I don't know what the fundamentals are behind it, but, cattle were limit down yesterday. That means they have a limit in cattle where if it goes to a certain limit, they stop trading until the next day. And then today they gap down and have a larger limit. And so that broke it to the downside. So that's just one of those things. Where we were looking to buy it yesterday was okay, and we got stopped out right away. I mean, we were stopped out right on the air as we were talking about it. And, there's nothing you could do about it. I mean, it just keeps dropping, and you can't stand there in front of it because, these things, they have a mind of their own. And you don't know where prices are going to go. That's what speculation is all about. And that's the beauty of it. You never know what's going to happen next, and you never know how much you're going to make on a trade. And so the only thing you can do is you can control the risk-reward equation by controlling the risk, and that's what you have to do. And preferably that you have a trading system that gives you a positive expectation of probabilities of more wins than losses. And that's what, Gartleys and butterflies and ABCs will do. They'll give you that slight advantage. And it's a slight advantage, but it's good enough, that you can make a comfortable living at it. Especially after you practice it a little bit, you'll be able to be far better than what you might think. So, but there's a lot of selling coming across a lot of the commodity markets today, with the exception of gold and silver. There's still some quite a bit of selling across the grain markets and meat markets, and other things like rubber, and crude oil is down again, and all of that is telling us that deflation is out there, and that's usually not good for the markets, but that's neither here nor there. The close will be really important today, because if we close below 1900 in the S&P futures, boy, this is big problems, because we're going to make that 1770. I think we'll make 1770 sometime in early October. Somewhere between the 3rd and the 10th would be my guess, just as a wild ballpark figure. And it won't be a straight down move. It'll be up and down like it's been all along. But the last part of it will be straight down. That'll be the panic part, where people finally realize that, something's not right in River City. And that's when, the door tries to open and there's not enough entrances, or there's not enough chairs to go around when you're playing musical chairs. So don't get into that. Don't get into that environment. That's not very good. When I was chatting with Tom O'Brien right before the break, we talked about what I think the problems are, and the first problem is the debt, the massive debt that the Federal Reserve has given us over these last 5 years, and then we have the derivatives market that's equivalent to a quadrillion, which is a trillion, and they don't even know what the whole structure of some of these derivatives are, because they're so unregulated. Senator Elizabeth Warren wanted to make them regulated, but Rubin and Greenspan and Larry Summers, they basically overwhelmed her, and they passed it through so that they're not regulated. So the banks can basically do exactly what they want to do whenever they want to do it. Clinton threw out the Glass-Steagall Act that was, the first line of defense from investment bankers from becoming, private bankers, and that did not work out well. But history will tell it a little different story than what we're looking at right now. We've been breaking down for quite a while, folks. I mean, the breadth of the market has been getting worse and worse, and it's just I haven't seen it this bearish in a long time. I mean, there's a few indices and a few stocks that are holding up, a little bit, but that's holding up by a thread. And it's not a matter of time that if these things start to roll, people start to sell things because they have to raise cash for redemptions. And there doesn't seem to be anything that could be available to, keep them from running too much, but we'll have to wait and see. We'll see what happens. I'm not too big in the news, so I don't follow a lot of things in the news, but that's neither here nor there. So, okay. One question that we had about the super full moon, what it means, I'll go over it again. A super full moon is nothing more than when you have a full moon that comes in at perigee, which is as close to the Earth as it gets, or apogee, which is far as ways that it gets. Now, when you have an eclipse, that even adds to it, because that is the ecliptic of the Earth. Go to Google, like Jim Twentyman says, defy human nature, do the work yourself. Go to Google and click on these things, and you're going to see some wonderful animated cartoons of what really happens with apogee and perigee and the eclipse, and you'll see the beautiful harmony that's there of how the moon moves in an elliptic orbit, and you'll be able to see it and what it actually means and how the equinoxes line up. All of that is very, very important. The ancients knew this because they planted their crops and harvested them against the equinoxes. So it's really spectacular to see how the thing works, but it's all part of a giant puzzle that I have never been able to break the old ice on. So, but you don't need to break it. You only need to melt it just a little bit to get an edge, and that's what you're trying to what you're really trying to do. I wanted to reiterate one other chart that John Murphy shared with us this week, and that is this rising wedge that we've had forming in the stock market. And you'll see that we're breaking down below this wedge now today. in the SPX, and that sets up for much lower prices. That line that you're looking at, that rising wedge, is nothing more than a 3-week rally is what it was. And week is W-E-A-K, because it went right up to the 61% retracement of the August 19th high and then turned down from there. As you recall, that was the day that we had with the Federal Reserve coming in with their announcements coming in exactly when Mercury was in retrograde motion. So that's what we're going to be looking at. The thing, we got silver really close to $15 now, which is good, and we got gold breaking out above the 1147. So that means we're probably getting ready to move up a little bit more in some of these things to see if they're going to go up. The gold silver index is still far below where it should be, but that's no different than than the other things that happen. I mean, that they follow. Sometimes the gold follows, sometimes the silver follows. Right now, silver is following the gold, and that's really what we're watching when we're doing this. So we'll keep a close eye on that market also. Now, I better, I had a question about Baidu, and I better, since I put this in the first show, I better put it in. I did John Logan's show, and I wanted to put the Baidu chart in here because this shows you the chart of Baidu, and it's exactly what John Logan talks about, is weaker stocks tend to stay weak and stronger stocks tend to stay strong. And that's what's happening here, is you always want to buy the strongest stocks and sell the weakest stocks. And as you can see in Baidu, we continue to make new lows below August 24th when the rest of the market rallied. This could not do that. Whereas if you pick something strong like the IBB, the biotech index, that would have been far, far better, and you have been able to see that worked, very, very easily for you. So that's another thing that you want to be watching at. So we've getting really close to our number now in the S&P at 900. And we're not too far away in the NASDAQ. We're breaking down into that. Watch this 900 level, folks, in the S&P, because it's a really key spot to look at. And it's going to be very, very interesting, what happens. We've only been open, 20 minutes? Let's see, 40, yeah, 22 minutes so far. And we will see if the market will get down to that $900, 1900 handle in the S&P. Below that, you're looking at something. I believe that we're heading towards 1770. That's what the chart says. I mean, the 20-minute line says that. Everything tells me that. I mean, it's just looks. That's where we want to go. We won't get there today, of course, but we probably will get there. That's that's the bottom line of what we're looking at, in my opinion. And of course, opinions, like we say, are like armpits. Everybody has one, and it usually smells. Okay, we do have a little bit of a bounce. Now, keep an eye on the another way to watch this market. If you want to be a hero and you want to try to pick the low today, watch the Treasury bonds, because if the Treasury bonds get up to that 117.15 and stall, and we're not very far away. The high today has been 115.11. We're on that high right now, so we're within the ballpark of where these areas should be in the bonds. We're getting very, very close to it right now. So watch that number, very, very closely. 157.12. And the high has been 157.11. So watch that real closely, boys and girls. A lot of things happening. Okay, we'll be right back after these words.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, we are back here at TFNN, and we just hit the 786 retracement into gold up here at this 1154 level. Don't know if that's going to stop it or not, but keep an eye on the bonds. We hit that number at 157.12. We're not very far away. We came within 2 points of the number in the S&P at 1900. The NASDAQ was off by a few points also. So this is the first hour, and if this market doesn't collapse right from here, we're probably going to get a bounce. How much of a bounce, and if it comes, I'm not even sure if it does, but any move below 1900 in the S&P now would be very, very negative in my opinion. If it in fact does, I think it will occur. Whether it occurs today or not, I'm not sure. But right now we're set up to have a pretty substantial move. The other thing to keep an eye on is the Canadian dollar. We got up to the first level of resistance up there at 134.13. The high was 134.16. We backed off a tiny bit from that level, about 40 pips. Not too much, but that might be it. We have to wait. And I think the best way to trade that is to let this top be made and then sell the rally back. That way you know exactly where your risk is, and you would put your stop not at the high, but at the previous high above that 1.27. We only have to risk about 40 pips, and then you're able to do it. But wait for this top to come in the Canadian, and you won't know it until the first 150 points down, and then watch for that next rally back after that. That'll be the one to watch. And since I'm on every day, we'll be able to keep our hands on it and watch the market unfold as we go through each day. So far we have had a pretty active day in the market, and we're going to get a lot more. Keep an eye on this gold at 1155. That's a real key level. So we'll see what's going on here, and we'll know from there. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.